Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in a narrow range around the 2549 high volume node. Heading into the open, our short-term bias is going to be neutral, and that means that we are going to have to be nimble and flexible with our intraday bias and be open to the market moving in either direction. Yesterday, we saw the ES make a marginal new high, and from that point on, the sell side has been a bit more active in the overnight session, and although it doesn't mean that the bias has changed in any significant way, we could be at a short-term inflection point where either the buyers have to push the market higher and put in a successful breakout beyond 51 to 53 half, or a failure to break to the upside could quite easily result in a downside move towards 42.75 to 44 quarter and 37 quarter to 39 half. Quite often, key high volume nodes serve as launching points for short-term directional movement. So off the open, we're going to keep an eye on the 2549 HVN because that could end up being a launching point for the next short-term directional move. Looking at the other markets, NQ is also trading near its recent highs, and if we look at the Russell, it's actually trading near its balance area low. So Russell has support at 1502 to 1504, and it's trading pretty close to that area. So off the open, if we see a short-term balance breakdown below 1502 to 1504 in the Russell, then that could provide a heads up on short-term directional movement in the S&P as well. On the other hand, if the Russell's holding 1502 to 1504 and NASDAQ starts breaking out to the upside, then the environment would be more conducive to an upside move. So you can see that we do have some mixed signals here, but at the same time, the market is at this short-term inflection point where the buyers have to step in and hold the Russell and then break ES beyond 51 to 53 half, or it could result in even a downside short-term liquidation move. So those are things that will need to be assessed off the open, because in order to get any kind of sustainable breakout beyond 51 to 53 half, we will have to see broad market strength, sustained upside momentum, and upward participation from the other markets. Now, given that the market closed at 25.53, the advanced decline line does not have to be very positive in order for the market to attempt a breakout beyond 51 to 53 half. It just has to be in somewhat positive territory and trending to the upside. The more important thing is going to be whether we are seeing upside momentum, and that's something we can gauge via the NYC tick. So in the event that the market does try to head higher and break 51 to 53 half, the question is going to be whether we're seeing the NYC tick hold above zero and at least print plus 5 to 600. If that's the situation and the other markets are also heading higher, then the underlying environment would support the idea of an upside breakout. But if we're not seeing upward momentum, or if we're seeing pretty clear broad market weakness at 51 to 53 half, then it would make it very difficult for the market to put in any kind of sustainable breakout, and that could lead to a move lower into 42.75 to 44 quarter and 37 quarter to 39 half. Now on the downside, in order for the S&P to put in any kind of significant breakdown below 46 and 42.75 to 44 quarter, we would have to see broad market weakness and sustained downside momentum and participation from the other markets. So if the S&P is going to break down in any significant way, you want to see a very weak advanced decline line, which is trending lower, the NYC tick holding below zero, NASDAQ also failing at its recent highs, and the Russell breaking down below 1502 to 1504. So if that situation develops in real time, then it would open the door for a downside move into 37 quarter to 39 half. That is a valid area of support where responsive buyers can be active on first test. But if we're heading down on decent downside momentum and increased volume, then we don't necessarily have to stop at 37 quarter to 39 half. It's an area of support. Buyers can be active there, especially if the market's exhausted into it. And depending on the situation in real time, it could even end up being a reversal point. But that is something that we will have to gauge in real time. If we're seeing excess weakness and continued and sustained downside momentum, then we could even head a bit lower test the gap at 36.25, the naked VPOC at 35.25, and then find buyers at 32.5 to 34.5 or 29 to 30.5. Now, 32.5 to 34.5 and 29 to 30.5 both mark range extremes. So those areas are more likely to cap the downside and end up being a reversal point. So that is how the market is set up heading into the open. It's a fairly mixed picture, and that's yet another reason to maintain that neutral short-term bias, be flexible and nimble with our intraday bias, be open to the market moving to the upside or to the downside with the idea that there could be some short-term directional movement kicking off from that 25.49 HVN today. But these are all things that we will need to assess in real time and then establish our intraday bias accordingly. So those are the main ideas heading into the open. Let's see how the market responds to the 25.49 high volume node and the 51 to 53 half initial resistance zone, and we'll take it from there.